There have been many videos on the subject of cryptocurrency wealth transfer, but what exactly are they talking about? Pretty much everyone is aware that in 2017, a lot of investors lost money having bought Bitcoin at $20,000 during all-time highs. At the same time, others became crypto millionaires. Those smart enough to sell at all-time highs made tremendous gains and may or may not have gotten back into crypto when the market went bearish. In this video, we'll take a look at what many see as a cryptocurrency wealth transfer happening right before our eyes. Who's involved? Cryptocurrency could be a huge disruptive force that is signaling the start of wealth transfer. Trillions of dollars are expected to be transferred to younger investors over the course of the next 30 years. Baby boomers are now outnumbered by millennials, but still control 70% of disposable income in the United States. Within the next 20 to 30 years, that wealth will transfer to younger beneficiaries that do not trust financial institutions nor invest in traditional markets. Recent studies indicate that 30% of young adults aged 18 to 34 see themselves investing in Bitcoin rather than traditional stocks or bonds. Awareness of cryptocurrency is about 42% versus 15% among people aged 65 and older. It's safe to say that as millennials receive inheritances from their elders, investment in cryptocurrency is likely to increase. Millennials are well aware Bitcoin is limited in supply, and despite the rise in price or the risks, cryptocurrency will most likely be an asset many will choose to buy. Meanwhile, there are significant indicators that institutional investors are currently buying Bitcoin and some altcoins, while at the same time advising the public to avoid cryptocurrency. Why invest now? Should one listen to those advising to avoid cryptocurrency, or to those making startling predictions about the direction of Bitcoin and cryptocurrency wealth transfer? Millennials aren't the only ones interested in buying and trading cryptocurrency, so competition for Bitcoin will only become greater with new investors entering the arena. This reality will most likely force prices to even higher levels. Should one invest when financial kingpins are saying you should run away? It may be wise to start learning how to invest versus worrying about when to invest. The best way to start is by gaining an understanding of cryptocurrency. Even though the market has fallen recently, that doesn't mean it's a good idea to shun the opportunity of significant gains to come. Cryptocurrency investment requires a bit more knowledge than traditional markets. You'll need to set up digital accounts, transfer fiat money into those accounts, and learn which exchanges are safe and secure. You also must learn how to safely store your cryptocurrency assets once they are obtained. Understanding and controlling private keys is critical knowledge to have. Where are we now? It's estimated that on the technology adoption curve, Bitcoin is at the beginning edge of the early adopters stage. This classic adoption curve is applied to the emergence of all new technologies and parallels well with some of the greatest innovations of recent history, like air travel, television, cell phones, credit cards, smartphones, video games, the internet, and more. It's also important to note that Bitcoin is a worldwide currency, thus finding exact metrics to define adoption is difficult. Regardless of exactly where we are on the adoption curve, most agree that it may very well be the first viable S-curve. Bitcoin is finite in supply, therefore the more users that adopt it, the higher the price should rise. If you have any questions about cryptocurrency and cryptocurrency wealth transfer, contact us today. And if you enjoyed this video, be sure to like, comment, and subscribe.